EOH reported a 40% rise in revenue to just over 5 billion rand. That was for the year to end July, driven by a combination of organic growth and recent acquisitions. John King is the Group Financial Director. He joins us here in studio. You remind me, even though you might not know him, of a man called Malcolm Rutherford. Malcolm was the Group FD for Dimension Data. And when they were in their heyday, putting these kind of numbers on the table, he couldn't see the end of it. And your shareholders in your company can't see the end of it either. The share price up a little today, but up 87% in the last year, 3 times in the last 2.5 years, 40% growth in revenues. Are you going to defy gravity in a way that Dimension Data couldn't?
Well, we have over the, we've been in existence for 15 years now, and our compounded annual growth has been 45%. Essentially, we've been doubling the size of EOH almost every 2 years. I think to put it into perspective, we are a 5 billion rand company in terms of revenue. The addressable market, IT alone, is probably between 80 and 100 billion. The managed services market's probably another 80 to 100 billion. So we're 5 billion out of a couple of 100 billion market. A long way to go. So we're very optimistic.
Malcolm said the same things about data. They had the whole world and they started doing acquisitions all over the place, and perhaps that was their downfall. Your acquisitions, though, are the smart ones, the bolt-ons.
Well, I think from an acquisition point of view, I think our strategy is organic growth plus acquisitions. We don't sort of at the beginning of the year decide we're going to do 3 or 4 acquisitions or 10 acquisitions or going to get a certain percentage of growth out of acquisitions. What we have is a puzzle, as I put it, with various domains in that particular puzzle. We have lots of white spaces. We look for the right businesses in those white spaces. When they come along, we will get those businesses to join EOH. And we talk about businesses joining EOH as opposed to acquiring businesses. And fundamentally, that's, I think, the difference. People join EOH. We don't acquire them. We don't buy people. So we only look for good businesses. We don't look for businesses we can turn around. But what we do is when they do join EOH, we tend to unlock their potential. And businesses that have not had the opportunity to perhaps deal with much larger enterprises before, with EOH backing, are now able to interact with those particular businesses, and they do fantastically well.
Give me an example, John.
Well, if you take in the IBM space, and I won't mention the company, but in the IBM space, there was a small company that we acquired about 4 years ago. And at the time that we were buying that particular business or looking to acquire that particular business, 2 of the big banks came to us and said, if this business joins you, we'll place 2 orders, one for 40 and one for 30 million rands at the time, on the signing of that particular deal. And that happened. Another one is down in the Western Cape, more recently in the Microsoft space, where they basically have doubled the size of their business in a year. They've done nothing different other than be able to work with us and our clients. We have a partner for life philosophy. So we don't want to go into a client and do a job and do a project. We go in there, we stay with those clients, we grow with those clients. In the IT space, as you would know, what happens is that you have to become a specialist in different fields. They get to a stage where they have to have 40 specialists to just operate their businesses. By coming to an EOH, they're then able to obviously, we can use what we call an FTE, the full-time equivalent, and we can have a person servicing 1 or 2 or 3 clients.
And they can also tip you on the businesses that are doing well and perhaps come into the company as well.
Absolutely.
You have appointed a new chairman, Sanzile Zungu.
Yes.
Extremely well connected
Yes.
with the Zuma regime.
Yes.
He succeeded Matthews Poza,
Yes.
not so extremely well connected with the Zuma regime. As a skeptic, I wonder, is he the right man for the job, or were there other reasons?
I think if you look at Sanzile, a fantastic man. A lot of energy, a people person, an entrepreneur. Very much the same sort of philosophy as EOH. He's not a person that knows a huge amount about IT, but I don't think you have to know a huge amount about IT to be a good chairman. He's obviously, from an ethics point of view, from a governance point of view, we're very excited about him joining EOH. So we think he's the right man.
Will he open doors for you in government?
We do about 25% of our business already in government. I think from an EOH point of view, what we look at is delivery. So yes, whether you'll open doors or not we're not 100% sure. We have a wide a range of businesses that operate in government already. So we are fairly well placed in government.
I ask this because when I spoke with your colleague, Asher Bobot,
Yes.
probably a year ago, he said your focus was to get more involved in the public sector. That was a big opportunity for you, which was strange because everybody else was running away from the public sector for other reasons.
Yeah.
This appointment isn't going to hurt that process.
I don't think so. I don't think so at all. I think people see him more as a businessman than as a politician. I think Matthews was probably seen more as a politician than a businessman. I think that's the difference.
So when your shareholders look at the rating of the stock at a price to earnings ratio of almost 20, at a dividend yield of 1.5%, they must be asking you, are you going to be able to keep 40% revenue growth, 35% earnings growth going for much longer?
Yes. You know, I've been asked this question year in, year out for the last 5, 6, 7 years. And everyone tells us we get into a stage where we're too big, where our margins will be decrease, etc., etc. I think from an organic point of view, we grow generally each year about half-half. Half our growth is organic, half through acquisitions, more or less, and it ranges 45, 55, 50, etc. All the businesses within EOH are contributing. We don't have any loss-making businesses in EOH. There's a huge opportunity out there. There's huge opportunities in the outsourcing space. You know, businesses are outsourcing the IT. We have a whole strategic, we want to get closer to our clients. So we're looking at consultancies that specialize in certain industries, that actually come from the industries, so they can be the interpreters from a technology point of view. And technology is no longer something that is nice to have. It's an imperative. So there may not be huge projects, but there's always the upgrades, there's the whole digital, the media stuff. I mean, it's going to be there for a long time. And the industry itself is growing at probably twice the rate of the economy. So just that alone obviously contributes.